What can you tell us about your analysis of the suspension of trading on the New York Stock Exchange yesterday?
Well, it's part and parcel of a number of problems. We had 3 major computer problems in the country yesterday, but it's also part and parcel of the flash crash and other problems we've had. I think it's good that we have a resilient stock trading system so that people who wanted to buy and sell shares yesterday could use a variety of other platforms. At the same time, I'm concerned that high-frequency trading is overloading the system on some occasions, leading to volatility on others, and is always a situation where we have a misallocation of resources. We have some of our best and brightest making some of the largest amounts of money for not providing any real social benefit. What we ought to do is make sure that the profits on stocks go to real investors, people who are really selling shares that they've owned for a while, people who are buying shares to hold for a while, rather than scooped up by people who operate in milliseconds.
Congressman Sherman, I'm wondering if you could comment on the idea that we have too many exchanges.
It was good that we had some extra exchanges yesterday. I think the real problem is we have too many trades. The idea that I'm told the average holding period is now down to under 20 seconds. Just a few years ago, it was measured in many months, and a few years before that in years. We ought to have a financial system designed to finance real companies with real investors making real investments, not a situation where our best and brightest are trying to scoop in, buy a stock for 1 or 2 seconds and then sell it.
But don't they also take the risk, and will you be holding hearings on such traders?
Well, I'd like to have hearings in the Capital Markets Subcommittee on the general issue of high-frequency trading and on the ability of our markets to handle it. As for taking a risk, I think if you buy a stock and sell it within 2 seconds, you're not really performing a risk-absorbing function for our capital markets and for the greater economy.
I'm wondering if you could comment, Congressman, on a proposal by the Senator Bernie Sanders, now a presidential contender, that there be a levy on stock transactions, financial transactions.
I support those in concept, but most of the other people proposing them propose rates so high that it will drive business offshore. I think if you had a very small tax, its primary effect would be to help real investors make sure profits aren't scooped up by people who are in for milliseconds. You would get rid of the high-frequency trading, but keep the real trading here in the United States. So I'd like to see such a tax, but a very low rate.
Congressman, based on yesterday's suspension of trading at the New York Stock Exchange, it seems as though markets reacted quite benignly to the suspension of trading. Does that mean that there needs to be less regulation of capital markets?
I don't think that this crash is going to be good for our capital markets long term. Your average investor just sees this as one more risk, one more reason to demand a higher rate of return before they enter into equity investments. I think it's psychological.
You don't think the average investor, Congressman, is more sanguine about the moves higher and lower in the stock market? Are average investors really day traders?
No, but people who didn't even have any investments yesterday, what do they see in their headlines? New York Stock Exchange shuts down. That's the kind of headline one saw in 1929. You don't like to see those kinds of headlines. Now, you and I know that there were multiple other markets, that the New York Stock Exchange is just one of many stock exchanges that trades went through. But to those, I would say particularly...
But is that a communication issue rather than a market issue?
I would say when you have a failure of your, for several hours, of your most prominent stock exchange, that's not a good day for Wall Street.